Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Rausen Pereira. The Reserve Bank of India will check if troubled lender Yes Bank's auditor had raised any alarm in the past year. The Apex Bank has been in touch with the auditor and will look into whether they had specifically issued any warning in the past 12 months. According to media reports, RBI has been in touch with auditor BSR and Co and wants to know if it had raised any red flag relating to the health of Yes Bank or any other issue. The auditor is part of KPMG India. The central bank is also likely to question the auditor on whether the SBI proposal would have any material impact on the existing accounts of Yes Bank. On Friday, the RBI announced a reconstruction scheme for the bank. It said that SBI that has expressed interest to invest in the troubled bank would do so to the extent of holding 49% shareholding. The Apex Bank said that SBI's investment in Yes Bank would not impact the employees and their current terms of employment. BSR and Co was appointed as Yes Bank's auditor after RBI banned SR Batliboi and Co for a year. The RBI had stated that the firm that was part of E&Y was banned due to lapses identified in a statutory audit assignment carried out by the firm. On this edition of The Big Picture, we will analyze if responsibility needs to be fixed for auditors. Joining me on the program today are Shubhamoy Bhattacharjee, Consulting Editor of the Business Standard, Jayant Das Gupta, former Secretary, Economic Advisory Council to the Prime Minister of India, and Sunil Garg, Director, SSA Legal LLP. Thank you to all my guests for joining me on this edition of The Big Picture. Shubhamoy, let me begin the program with you. The role of the auditor has now come into question. The RBI wants to look at the role of the auditor and see whether any red flags were raised in the past 1 year with regards to Yes Bank. What's the latest on that and what's likely to happen there?
What's likely to happen there? Well, you know, even before this thing came along, the PwC recently has announced that it has separated its audit functions, that those companies with which it has an auditing role, it will not take up other roles. So essentially what it does show is that auditors are already under a cloud, and essentially this coming back on auditors, that what auditors will be able to show and what the auditors have shown, and whether they have raised red flag adequately, is something that is frankly becoming quite a difficult question to understand. Let me just put it this way. The International Forum of Financial Auditors, this is the forum that looks at how auditors have audited companies across the globe, have found that in sample for 2017, 40% of the audits were subpar. If you say what happened in 2016, it is 47%. So you can say, okay, it's come down. But if 40% is subpar, let's put it comparison with a, say, hospital case. Supposing there's operations in hospital and you found 40% of the cases have been handled badly. What will you do with the hospital? You know, essentially the problem that's coming along is that how do we define the role of the auditors? What is the financial role of the auditors vis-a-vis the companies? And what is it that the investors are expecting the auditors to say?
Correct.
Often what the auditors say is also not understood, and often auditors also are not sure to what extent and what will be the remit of their role. For instance, many of them last year, about 30 of them, have walked out from audit of different companies. They did not complete the audit because they found lapses. SEBI has come up against them saying, no, you can't walk out, you have to complete it. But again, I mean, and as this case shows, the SR Batliboi case, now BSR and Company, that these are not fly-by-night operators. These are big companies, they are coming in, they have got strong audit pedigrees. They are obviously looking at some things where there's a problem. But what is it that the problems are showing them? What is the interpretation is becoming extremely difficult to sort out, that where does the mess lie? Does the mess lie with the fact that the company was siphoning of funds? Or is it about the fact that the company had already siphoned of funds and now the audit of, say, Yes Bank is basically showing that those lapses are there? You know, because throughout last year, the rating agencies have been consistently lowering the rating of Yes Bank. Those ratings, the lowering is consistently coming up because the audit reports are showing that there is a growing difference. In fact, as RBI's itself audit showed, that there was a 3,777 crore difference between what Yes Bank had showed its NPA and what the RBI statutory auditors found as NPA. So the problems are not hidden. It is a question of what is the extent of the problem, and in this case, are we saying that every time an audit is done, an audit should necessarily be what is called a forensic audit? That is the major thing I suspect is going to come up more and more. Then should an audit always look like a forensic operation on the accounts of a company?
Sure. All right. So, taking the discussion forward, Mr. Dasgupta, what or rather when does the role of an auditor come into focus, and when does the auditor take control of things really if something is going wrong within the bank?
If we compare this whole issue of audit by audit of the scheduled nationalized banks and of the private sector banks, the basic difference is that the Reserve Bank of India appoints the statutory auditors for the nationalized banks, whereas the bank boards of the private sector banks, they appoint their own auditors. So there is a certain degree of latitude and obligation which perhaps some of these audit companies feel towards the board and their employer. The second point is, and this has been brought out very clearly in the MCA discussion paper, the Ministry of Corporate Affairs discussion paper, there are 5 issues which need resolution. One is that the auditors may have this self-interest. They also should be subject to self-review. They should shun from advocacy, and they should not be subjected to intimidation. And there are 5 factors which have been listed out. Now, what happens is that there is sometimes lack of disclosure on the part of the audited company, banking company for instance, which does not provide all the materials. The second is if the auditor is in some fiduciary relationship, and one of the things which the MCA paper talks about is to separate audit services from non-audit services, which Shubhamoy has also mentioned just now. So that is something which needs to be done, but how to empower the auditors to bring out the truth and to give an honest, objective opinion as to what they feel about the non-performing assets and the financial statements which a bank is putting out, that is of the essence. So that needs to be somehow ensured, and that the auditors will have to be given that powers, whatever they require to come out with their honest opinions. At the same time, these conflicts of interest which the MCA paper has sought to bring out and to seek public opinion on them, comments on them, they need to be looked at very carefully so that we can remove these factors from consideration and the auditor can go about his job in an objective manner.
Right. Okay. All right. So, Sunil Garg, let's talk about the role of the auditor then in all of this.
See, first of all, we understand which auditors, statutory auditor, internal auditor. Let us understand the types of audit generally a bank undergoes. First, there is a risk-based internal audit. Every branch has risk-based internal audit. Then there is concurrent auditor. Then there is RBI inspector. There are rating agencies who are doing due diligence. And then comes the role of the statutory auditor. See, if we are just fixing the statutory auditor for all the messes, then we are again on the wrong path. And again, it is the basic duty of the management to report the NPA or to report the financial statement in a true and fair view. Auditor has only to comment on them. And what happens in the case of Satyam, whether it was Satyam, whether it was PMC or whether it was this Yes Bank, this management connived with the people and they siphoned on the funds. It means the basic responsibilities with the internal audit and the concurrent audit. And what happens practically when the statutory auditor comes at it's a postmortem stage. He comes after everything has happened. At the postmortem stage, what happens actually when he comes, he takes the sample audit. Because if we start the forensic audit, as Soumya said, every time if there is a case of the forensic audit, then audit will never be completed. It will take a long time to complete the audit. Hence, we have to understand which auditor has to be fixed. all the 5 auditors, whether it is internal auditor, whether it is inspection or whether it is statutory auditor, they should join hands together at the time of signing the balance sheet. When the balance sheet is going to be signed by the statutory auditor, I propose that the internal auditor should also be there and he should discuss what he has done in the throughout the year. Then we can fix the responsibility of any auditor.
Absolutely. Taking the discussion forward now, Shubhama, as far as rules are concerned, what are the rules that auditors are bound by?
Okay. One of the things is clearly that the entity for which the auditor is auditing shouldn't be looked at as from a consultancy business, consultancy of investment, taxation, anything else by the same firm, and they should be firewalled. Now it has been taken up to mean, as Mr. Dasgupta was saying, basically that the same firm will not do. The problem also comes from the fact that what is the fees and who will pay. That is also a major thing about audit. The demand that we are making means that the company should pay a fees to the auditor which is commensurate with the effort that that auditor will be making along. Now, this can create a trouble, and this is already creating a trouble globally, that what extent and how should then the fees of the auditors be regulated. Should it pay for the auditing work, or should there be a element of state subsidy? Obviously, there can't be any state subsidy. So, it has to be paid for by the firm. But if that is so, then the shareholders willing and able to pay for the cost of that sort of an audit? This is a vital issue that is actually ignoring, because India is not the only country where this challenge is always coming up. One of the ways USA has handled this challenge, I am going away from the rules which you asked for, is about the resolution, because the rules can be written about in plenty. How does it that certain geographies or certain countries are able to handle the audit work better? So, in USA what happens is the members of the bar, when there is an audit report where there is a hint or sufficient evidence to prove that the auditors were not up to the mark, the courts and the members of the bar themselves make it so punitive for the auditors that the private, essentially is not just the courts coming down, it is the ecosystem of the lawyers and the auditors framework who himself impose a penalty. And there have been several penalties of this sort, which has actually, in fact, the recent one was the case of where PwC, in the case of Alabama Bank, actually paid a fine when it was not asked to, but simply to escape further chances of it being asked to pay, face prosecution. So that is where the problem becomes heavy. That is a possible solution. There are courts also have to ensure that you just don't say that auditors fix responsibility and then therefore go about it. The court system, the judicial system also has to develop the technical ability to be able to enforce that sort of a resolution and that sort of a punitive action on the auditors by asking smart questions, by taking the trial onto that field. We have not seen evidence of that so far, and frankly that is where a major lapse does remain. The third part is that in countries like UK, where we don't have this sort of a resolutional system, there the government itself sets rules which makes it very strict. But then that's the sort of stuff where there is a lot of enlightened lawmaking which has worked on simple laws but yet extremely difficult laws for auditors to work with. We have to work we have to see what works best. My sense is the US system, where the ecosystem actually comes along, where almost the fraternity is punishing the auditors for lapses in addition to what the courts can do, is actually a very salutary step. And I think that is something that we need to walk the path. Remember, the banks, the public sector banks, it might be thought that our public sector banks, these auditors don't have a problem, but it's actually not true. If that had been the case, then 11 of our banks, public sector banks, would not have been necessary to have put them under prompt corrective action. They were under auditors appointed by RBI. But again, the question there was that these banks, the auditors had actually just sat and had kept on passing their accounts for years with the NPA reaching monstrous proportions. So much so that I mean, it's even now 2 of the banks are still under prompt corrective actions. So the problem is across the board. It's not about the private sector, the public sector, the auditing system, and who penalizes the auditors. I think that is something that needs to be worked out carefully, instead of saying that my part of the field is nice, your part of the field is muddied, and so on and so forth.
Absolutely. I'm going to take 2 points forward with you, Mr. Dasgupta. One, of course, the point that Sunil Garg was making about, when the management is conniving with businesses, what do you do in a situation like that? And also, if you look at the big 4, they seem to be in some sort of trouble or the other. I mean, are we expecting too much out of our auditors as well? Could that also be an issue?
When there is concentration of market share in the hands of a few companies, then the chances are that there would be, some, overlooking of wrongdoing or negligence. I would say negligence. So the MCA paper, in fact, also discusses about how to broad-base the auditing into the hands of a larger number of companies, and so to say break the market domination of these big four companies. So that is something which is required, because there has to be rotation, and there cannot be any relationship between audit services and non-audit services provided by the same organization at the top. So that is one thing which is needed. The second point is about the factors which Mr. Garg mentioned, very relevant factors, that there are many kinds of audit. Internal audit, of course, is carried out by the bank itself, and then there is this internal capital adequacy assessment, which is also taken into account by the RBI. And but if there is falsification of records or negligence or overlooking of facts, and the management is invisibly influencing its own internal audit, then these things will not come out into the open. So transparency across the board, and I think the time has also come to bring in some amendment somewhere which will enable whistleblowers to come to the fore, and if there is something which is going on in a blatantly wrong manner, to bring it to the notice of the authorities. So that is there. Now there are 2 other issues which I wanted to mention. When there is a statutory auditor, normally there is a management kind of a report, which is, if I am not wrong, it is called the long form audit report, LFAR. And LFAR brings out a lot of things which the statutory auditor may have noticed. And one of the things which many statutory auditors insist upon is that they want to go through the monthly reports of the concurrent audit. So of course it is a kind of a postmortem, and because the number of branches of a bank, for instance, are numerous, it is not possible to audit the accounts of every branch. So there has to be a kind of a sample audit. Now these are some of the problems, but the final point is that there has to be greater regulation, there has to be separation of audit services from non-audit services, and there has to be deterrence. The 3 things which the then governor of the Reserve Bank had mentioned was that there has to be criminal investigation if there is connivance which has been proved by the agencies. There has to be regulation, and the last thing is that there has to be concurrent reviews and audit conducted constantly to get to the root of things. So these are some of the things. There are a large number of factors, and there is always potential that human factors will intervene, and there will be somebody going astray somewhere, maybe in the in presentation of documents. For instance, whenever there is concurrent audit or statutory audit, if there are large amounts of loan which have been given, they are supposed to go through all the documents right from the application stage to the final disbursement stage, and then also to monitor the repayment.
Absolutely.
So these are some of the things which ought to have been done or are getting done, but there could always be a slip somewhere. and matters falling through the cracks.
Right. Okay. All right. So, talking about falling through the cracks, Sunil Garg, what is the SOP that is usually followed if an auditor finds some lapses?
See, Frank, first of all, let me rectify Someo also that as per the MCA, no audit firm can undertake any other service of that same firm. No taxation, no other legal services. It is already there in the law, first of all. Secondly, always a statutory auditor, their audit is based on the sample. But the deterrent should be on the management. Satyam held in the last decade, almost 15 years. But what happened next? Because there has to be a deterrent in the mind of the management. If they will report wrong, they have to be hanged. They will be punished heavily. Otherwise, you make auditors so responsible. Nothing will happen unless and until we have a prompt corrective action in the shape of the internal audit. If the internal auditor, because he is doing the day-to-day job, concurrent auditor is doing day-to-day job. If he show any red flag, it should be immediately audited. It should be immediately. There has to be a forensic audit immediately. Secondly, there has to be a fear in the minds of the management. And thirdly, most important, almost all the listed companies and the private sector banks, their auditors are appointed by the management itself. Where is the independence then? If the management is appointing the auditors, the question of independence, then it's a very shaky thing. The auditor of the private bank, at least any cooperative bank or the listed company, they should be appointed by NFRA or CAG or some government agencies, as RBI appoints the government audit banks auditors. So this can help for improving the quality of the audit also, and this will create a deterrent in the mind of the management also.
Absolutely. All right. Concluding remarks now from all my guests with the best way forward, starting first with you, Shubhamoy. So, should we fix responsibility as far as the auditor is concerned or not, or what is the best way out?
Obviously, I mean, anybody has been shown to be having slipped up, you have to fix responsibility. Let me just put in one thing here. In the case of ICICI Bank, they gave out loan, the case of Chanda Coaches, they gave out loan. Those loans were actually asked by there was nothing irregular about the loans. The from the auditing standards, those loans were perfectly okay. The problem was that it was a related entity, and this was something which the board had cleared. The same board, few days later, after getting the rap from RBI, turned around to say, no, this loan shouldn't have been given. So, ICICI Bank's major problem stems from that fact that those loans were given to related entities. And it's not that those entities couldn't service it. Those entities were perfectly comfortable, but the fact is you can't give it to related entities. So, here it's not an audit issue. Here it's a large question of what the board level responsibility is. So, essentially, there's a lot of, entities out here which have to sort of, figure it out. RBI, over the last 1 year, an RBI person is sitting on the Yes Bank board. How many times has the RBI person red flagged anything in the Yes Bank accounts? These should also come out. And I think, frankly speaking, otherwise we will fall into the safety net of saying the auditors or something. Obviously, they should be penalized. But I think people, there's a bit of a blame game going around here where people are sort of, those who have the ability are trying to weasel out of the responsibility.
Okay, all right. Mr. Dasgupta, best way forward?
Two things. As far as banking is concerned, I think the RBI's banking supervision division needs to be strengthened, because from what I have heard, there are only 5 or 7 people looking after a particular bank's accounts, etc. So that needs to be strengthened because in the Western countries, especially the US, there are a very large number of people, at least 10 times more people looking at the financial statements and all other issues relating to a particular bank. So that is one. The second point is, this self-regulation business has not worked really in the case of most professions. We are still at the evolutionary stage. So there has to be a deterrent which will be exercised by some other authority. And I think that needs to be done. We can't really, if we go through the records of, let's say, the Medical Council of India, or the Institute of Chartered Accountants of India, how many licenses have really been suspended over the last 50 years for misdemeanor or negligence, gross negligence, etc. So there has to be some other authority which will do this. The last point is that auditors for listed companies and for private banks, etc., they should be appointed by some other entity, either the RBI, for instance, or SEBI, or as the case may be, or the Controller and Auditor General. And it could be from a panel prepared by the National Financial Reporting Authority, which I think is getting discussed now increasingly. So these are some of the steps which come to mind immediately.
All right. Okay. And Sunil Garg, close the show for us with your concluding remarks.
As Soumya said, there has to be responsibility to be fixed to the statutory auditor, no doubt, if they have done any negligence. But what happens, as he mentioned, in case of ICICI, same happened in case of Yes Bank. The management gave loan to the DHFL companies, and if we see the documents, all the loans were very good, but it was to a related party and they were siphoned on a back, came to the Yes Bank. So basically both has to be responsible, management, internal auditors and regulators, and then statutory auditors. Everybody responsibility has to be fixed.
Okay, all right. With that, then we'll call it a wrap on this edition of The Big Picture. Thank you to my guests for joining me on the program and putting things into perspective for us. What's coming out of this discussion is responsibility needs to be fixed at every level, and only then will we see a fix to this particular problem, is what the panelists are suggesting. With that, it's a wrap. See you again next time.